We do know that the brand counts for something, because when you look at the book value of a company, you find that the price paid for the stock is much more than the book value. You got to imagine that the difference is made up by the fact you have a strong brand, that you have some what do we call intellectual property, that you have great channel relationships that are worth something, and so on and so forth. So therefore, we do know that brand as one of those components has a value. If you sell your business, your pricing of the business you want to sell has to take into account of how much you're turning over as a strong brand. There are even firms that are in the business of brand valuation. And they will tell you, like a company, Interbrand, will tell you that if you want to buy Coca-Cola's company, basically, it's going to be $60 billion, whatever. Okay, now brand equity is not brand valuation. Brand valuation is putting a pound or a dollar figure on it. Brand equity is an aggregate of a couple of measures that go along with growing stronger in a marketplace. For example, if awareness increases about your product, if preference increases, if interest increases, if there's more momentum that your product has, like the iPhone now has momentum, you track those things and you average in a weighted fashion. Whether you're basically the number you had last time is now larger, so your brand equity has gone up, flat, or that there's been a decline in your brand equity. It's something that if I was a CEO, would want my brand people to report on what happened to our brand equity.
It was the two most valuable things in businesses are sort of talent and your brand, but then the brand is the one thing with your reputation that brings in the talent in the first place.
Every company should be concerned about its reputation, and that's related to brand. In fact, we even talk about branding a company or managing the corporate brand. But if you take it as reputation, and reputation counts, you want to know what the factors are that build your reputation as a company. The most important thing is the quality and the innovativeness of your products and services. You can't compensate for poor products by saying, well, we're giving a lot of money to charity. Or you could even, you sometimes say, but we're making money. Yeah, but you're making money now, but if it's not satisfying the customers, they're going to start going on the internet and telling how bad you are, and you won't make money later. So basically, the first thing in reputation is really your products and services. The second thing is your vision as a company and the quality of your management and how they may stand out and articulate the purpose of the company. The third thing would be your financial performance over time, over long-term profitability suggests a company that has been really serving the market well. And the fourth thing might be other things like the workplace environment. I mean, are your employees satisfied? Are you recruiting the best ones? Are they motivated? The fifth might be the whole emotional way the company, the customers and the stakeholders feel about the company. And the sixth might be its corporate social responsibility initiatives and so on. Now, those are factors that have to be managed, whether you're talking about managing our reputation or our brand. But those are the handles.